The first $100,000, the truth. Nobody wants to hear about building real wealth. Most people spend their entire lives chasing wealth, yet they never even make it to the starting line. They talk endlessly about stocks, real estate, cryptocurrency, and business ventures. They dream in millions while sitting on zero. And the brutal truth is this: until you save your first $100,000, you're not actually in the game. You're just pretending to play. If you're serious about understanding how wealth really works, subscribe now. This channel cuts through the nonsense and delivers the rational thinking you won't find anywhere else. Let me tell you why that first $100,000 is so impossibly hard and why most people never get there. It's not because they lack intelligence. It's not because opportunity doesn't exist. It's because they fundamentally misunderstand how compounding works. And more importantly, they can't control themselves long enough to let it happen. When you start with nothing, you're trying to push a massive boulder from a complete standstill. Every dollar you save feels insignificant. You put away $1,000, and at 10% annual return, you earn $100 in a year. To most people, that feels like a joke. They look at that $100 and think, this is pointless. I could spend this money on something I can enjoy right now. And that's exactly where they fail. They want the reward before they've paid the price. I know this because I lived it. I was born in 1924, right into the teeth of the Great Depression. My family wasn't poor by some tragic accident or bad decision. We were poor because the entire country was flat broke. My grandfather went bankrupt. My father, a respected lawyer, watched his clients disappear because nobody had money to pay for legal services. I grew up watching what financial weakness actually looks like up close, and let me tell you, it looks like desperation. It looks like grown men who once walked with dignity standing in bread lines. It looks like families unraveling because the stress of poverty tears at every relationship. That experience burned a permanent lesson into my brain. I would rather go through life with money than without it. Not because I wanted luxury or status, but because I saw what dependence and fragility cost people. I saw how quickly respect evaporates when the money runs out, and I decided early that I would build something that could withstand the storms I knew would come. But here's what nobody tells you about building that first $100,000. You have to behave in ways that everyone around you will think are strange, excessive, or even foolish. You have to save money when saving feels completely pointless. You have to invest tiny amounts when the returns look trivial. You have to ignore the powerful urge to copy your neighbor, who just financed a shiny new car or took an expensive vacation. They post it all over social media. What's the biggest financial mistake you've learned from so far? Drop it in the comments below. Let's learn from each other's expensive lessons. When you're young and working your first real job, putting away $1,000 feels like a significant accomplishment. And it is. But then you watch that $1,000 earn maybe $20 or $30 over an entire year, and your brain screams at you that this is useless. That voice tells you that you're sacrificing today for pennies tomorrow. That's the test. That's where most people break. They'd rather buy some toy or experience today than plant a seed that will take years to grow into something substantial. But here's the joke that nobody gets until it's too late. Those small sums, disciplined and consistent over years, become something formidable. The problem is you can't see it happening. It's like watching grass grow or paint dry. There's no excitement, no validation, no immediate gratification. Just slow, boring accumulation. And our brains aren't wired for that kind of patience. Once you finally cross that $100,000 threshold, something magical happens. The compounding engine that was sputtering along on fumes suddenly has enough fuel to really run. 10% on $100,000 is $10,000. Suddenly the returns are visible to the naked eye. Suddenly the effort starts feeling worth it. That $10,000 annual gain is more than you saved in your first year. The machine is finally working for you instead of you working for the machine. But most people never get there. Not because they can't, but because they're impatient, undisciplined, or both. They want shortcuts. They see someone get rich in cryptocurrency or tech stocks, and they think wealth comes from brilliance or luck or perfect timing. It doesn't. Wealth comes from surviving long enough, making few enough stupid mistakes, and letting compounding do the heavy lifting. Let me give you a blunt metaphor that captures this perfectly. Making your first $100,000 is like digging through wet cement with a spoon. It's miserable. It's slow. It's backbreaking work that seems to produce almost no visible progress. You're exhausted, discouraged, and wondering if you're wasting your time. But after you get through that cement, after you've built that base, it's like slicing through soft butter with a hot knife. The texture completely changes. The resistance disappears. The same effort that produced tiny results before now produces massive results. The profound irony in all of this is that the habits you need to reach that first 100,000 are exactly the same habits that will eventually make you wealthy. Live below your means even when you can afford more. Save like a pessimist who expects disaster around every corner. Invest like an optimist who believes in human progress and capitalism. Ignore the idiots who are spending money they don't have to impress people they don't even like. It's not complicated, but it is extraordinarily hard because it requires you to be different from everyone around you. I once said something that upset a lot of people, but it's true. Nobody can help you if you don't save. Not the greatest investment advisor in the world. Not Warren Buffett, not me. Not even divine intervention. If you spend everything you earn, there's no amount of financial genius that will rescue you from yourself. The math is brutally simple. If your savings rate is 0, your future wealth is 0. Period. The whole secret to wealth, if there is one, is this. Be slightly less stupid than the average person. Don't waste energy on envy. Don't overspend on things that lose value the moment you buy them. Don't borrow more than you can comfortably repay. Don't chase hot tips from people who don't know any more than you do. Do that consistently, year after year, decade after decade, and your first 100,000 will eventually arrive. And then the next 100,000 will come faster. And the one after that even faster. When I was a young lawyer in Los Angeles, I didn't make much money. But I kept saving anyway. I bought a few stocks when I could. I lived simply and well below the lifestyle my income could have supported. I didn't buy things to impress people I didn't care about, and I certainly didn't take on debt to pretend I was richer than I actually was. Eventually, my pile of savings grew. The discipline of those early years, when saving felt pointless and the returns were tiny, carried me through the rest of my life. Subscribe now if you want more of this kind of honest, no-nonsense perspective on building wealth. The game has rules, and we're here to teach them. Here's the real message that people miss. That first $100,000 doesn't make you rich. It absolutely doesn't. What it does is prove to yourself and the world that you're capable of discipline. And discipline is the rarest commodity in the entire world. It's rarer than intelligence. It's rarer than opportunity. It's rarer than luck. Most people can't delay gratification for a week, let alone for years. If you're under 40 years old and broke, don't despair. But don't kid yourself either. You need to save until it genuinely hurts. You need to make real sacrifices that your friends and family might not understand. You need to look your peers in the eye when they laugh at your cheap habits, your old car, your modest apartment, and know deep in your soul that you'll outlast them financially. Because in the end, the compounding machine doesn't reward the cleverest person. It doesn't reward the most charismatic. It rewards the most stubborn, the most patient, the most disciplined. That's the paradox of wealth building that nobody wants to accept. The beginning is absolutely unbearable. The middle phase becomes tolerable. The end becomes inevitable if you don't quit. The first 100,000 is hell, pure hell. But if you get through it, if you develop the discipline and the patience and the rationality it requires, you'll eventually look around and wonder why everyone else is still stuck at 0. So, the question facing you right now is brutally simple. Are you willing to suffer a little bit now so you don't suffer a lot later? Are you willing to be uncomfortable, to be different, to be patient while everyone around you is spending and consuming and pretending to be rich? Which of Munger's principles do you find hardest to practice? Let's discuss it in the comments. I read them, and your insights help other viewers too. Now let me talk about something that destroys more wealth than bad investments ever could. Envy. If you want to guarantee your own financial misery, start comparing yourself constantly to other people. That's envy, and it's the dumbest of all the deadly sins. Why? Because it's the only one where you don't even get anything out of it. Think about it. Gluttony, at least you enjoy a good meal. Lust, you get some temporary pleasure. Greed might actually make you richer if it's channeled properly. But envy, you just feel miserable that someone else has more than you. It's like setting yourself on fire to make your neighbor uncomfortable. You're the one who burns. When I was young, I watched envy destroy lives. I knew a brilliant lawyer, hard-working and talented, who couldn't stand that other lawyers were getting richer faster than he was. Instead of sticking to his solid practice and building wealth steadily, he jumped into every hot deal and stock craze he could find. He wasn't trying to make money for himself. He was trying to beat the guy next to him. And he lost his shirt doing it. That's how envy works. It blinds you to your own path. It makes you chase things you don't even want just because someone else has them. It makes you play games where you have no edge, in arenas where you don't understand the rules. And eventually, it makes you broke. Warren Buffett and I never wasted a single moment envying others. We admired some people. We learned from some people, but envy? Never. What would be the point? If someone has a yacht bigger than mine, good for him. I don't want the damn yacht anyway. It's a floating money pit that requires constant maintenance and crew. Here's the irony that most people miss. The more you compare yourself to others, the less you'll actually save. Because envy drives consumption. Your neighbor gets a new car, and suddenly your perfectly functional old car feels inadequate. Your friend takes an expensive trip to Europe and posts pictures on Instagram, and suddenly you think you deserve one too. And there goes your savings rate. People ask me all the time how to get rich. I tell them the same thing. Stop trying to look rich. Stop trying to impress idiots. The world is absolutely full of fools spending money they don't have to show off to people they don't even like. You want to join that circus? Fine, but don't complain when your net worth is zero and you're 60 years old with no options. You know who doesn't get rich? The guy keeping up with the Joneses. You know who does? The guy who quietly keeps piling up his savings and investments while the Joneses drown in credit card debt and car payments. The numbers don't lie, and the math is ruthlessly simple. If you save $10,000 a year for 10 years and invest it sensibly, you'll have a substantial pile that can compound and grow. If you waste $10,000 a year trying to look impressive, you'll have some fading memories and a stack of credit card bills. Which outcome do you prefer? Let me give you a personal confession. When I was starting out in Los Angeles, there were plenty of people around me who were much richer than I was. They had nicer houses in better neighborhoods. They threw fancier parties. They led flashier, more visible lives. I didn't envy them for a second because I knew something they either didn't know or chose to ignore. Most of them weren't really rich. They were leveraged. They looked like kings until the economic tide went out, and when it did, they were exposed as paupers in expensive suits. That's the lesson. Envy not only makes you stupid in your financial decisions, it makes you fragile. You take risks you shouldn't take. You spend money you don't have. You build an elaborate house of cards, hoping it will impress people who aren't even paying attention anyway. The cure is simple, though not easy. Stop comparing. Think like an owner building something real, not like a consumer trying to signal status. Care about your own pile of assets, not your neighbor's appearance of wealth. Because the world doesn't actually care how you look. It only cares what you can withstand when the inevitable storm comes. If you can kill envy in your life, you'll save more. If you save more, you'll hit that first 100,000 faster. And if you hit that first 100,000, you'll look back and laugh at all the people still trying to maintain appearances while drowning in debt. So, the next time you feel that familiar sting of envy rising up, remember this. It's the only sin where you don't even get to enjoy the sin itself. All pain, no reward whatsoever. You can do better than that. The truth is that envy is free poison, and most people drink it daily without even realizing it. Don't be one of them. Now, let me tell you about one of the most expensive mistakes I ever made. One that probably cost me tens of millions of dollars, maybe more. I sold too early. It sounds harmless. It sounds like a minor tactical error. But it was catastrophic to my long-term wealth. Decades ago, I bought into a company at what I thought was a cheap price. I liked the business fundamentals. The people running it were honest and competent. The economics made sense. But when the stock doubled in value, I thought I was being clever. I sold and took my profits. I patted myself on the back for being smart and disciplined. That company went on to multiply in value tenfold, maybe 20-fold. I don't even want to calculate the exact number anymore because it's too painful. That little act of impatience, that eagerness to look smart by taking profits early, probably cost me more money than all my other investment mistakes combined. That's the problem with being too eager, too active, too clever. Most people think the hard part of investing is knowing what to buy. It isn't. The hard part is sitting still, sitting while nothing seems to be happening. Sitting while everyone else is jumping in and out of positions. Sitting while the entire world seems to be screaming at you to do something, anything. Warren Buffett always says his favorite holding period is forever. That's not poetic language or clever marketing. It's cold rationality. If you find something truly great, why on earth would you let it go just because it's gone up a little bit? Selling a great business too early is like selling a winning racehorse halfway through the race. Sure, you lock in a small profit, but you give up the real fortune. I learned that lesson the hard way, and it scarred me. It made me much slower to sell after that painful experience. The irony is that most of the catastrophic mistakes people make are symmetrical. They either hold garbage too long, hoping it will turn around, or they sell greatness too soon, afraid of giving back gains. Both mistakes come from the same disease, impatience and short-term thinking. When I look back on my investing career, I don't regret missing some wild speculation that turned into millions. I don't regret skipping technology fads I didn't understand. What I genuinely regret are the moments when I owned something truly good and I was too eager to clip the ticket and run. That's a mistake you don't forget, and I've been reminding young people about it ever since. If you're lucky enough to find a wonderful business run by honest, competent people, don't be in a hurry to part with it. Those opportunities are genuinely rare, and compounding needs time more than anything else. You can't rush it. You can't force it. You can only give it the one thing it requires, patience. Here's the profound irony. The same stupidity that cost me millions has made countless other people permanently poor. The average investor buys at the top when everyone is excited, sells at the bottom when everyone is panicking, and repeats this cycle until they're broke. They can't sit still. Their attention span is shorter than a goldfish. They need action and excitement. If you want to beat 90% of all investors, here's the dirty secret. Just sit still. Sit on your savings. Sit on your investments. Sit on your hands. Do nothing most of the time. The world is absolutely full of hyperactive idiots trying to outsmart each other with constant trading. Don't join them. I once said that the big money is not in the buying or the selling, but in the waiting. That wasn't a clever line designed to sound wise. That was a scar talking. That was an expensive lesson sharing itself. So if you want to avoid my mistake, remember this. Activity is the enemy of returns. Stillness is your friend. Don't be too smart for your own good. If you find yourself itching to sell just because the price is higher than yesterday, stop yourself. Ask honestly, has the underlying business changed fundamentally, or is it just my brain looking for a dopamine hit from taking action? Most of the time, if you're brutally honest, the answer is that it's just your brain wanting excitement. And if you can ignore that itch, if you can sit still, you might save yourself from the most expensive mistake of all, the one that keeps you comfortable in the moment but robs you of a fortune over time. The truth is that my impatience made me rich slower than I could have been, but at least I learned the lesson, and I learned it well. The question is, will you learn it before you pay the same expensive tuition? The world is absolutely full of people who are completely certain about things they know absolutely nothing about. It's the default human condition. Ignorance mixed with overconfidence creates a toxic cocktail that destroys wealth. I've watched people go broke, not because they lacked intelligence, but because they had too much confidence in lousy opinions. They couldn't say 3 simple words that could have saved them. I don't know. When I was young, I thought smart people had all the answers. As I got older and hopefully wiser, I realized the truly smart ones were the people who admitted ignorance quickly and moved on. The faster you can say, I don't know, the richer and wiser you'll probably become. Take investing as an example. The average person reads a headline about oil prices or tech companies or interest rates, and suddenly they're an expert. They rush into trades with conviction they absolutely haven't earned through study or experience. And when it blows up in their face, they act surprised. What did they expect? That the world would reward arrogance dressed up as insight. Warren Buffett and I have been successful largely because we've stuck religiously to areas where we actually know something. If we don't understand it, we pass. We've ignored 99% of all opportunities that came our way. People think that's a weakness or a missed opportunity. It's not. It's survival. It's wisdom. You don't have to know everything about every possible investment. You just have to know with brutal honesty when you genuinely know something and when you're just guessing. That simple humility will keep you out of the graveyard where overconfident fools end up. There's a saying I love. An investor needs to do very few things right as long as he avoids big mistakes. Most big mistakes come from being too sure of yourself. That's why I've spent my entire life preaching what I call the gospel of doubt. Here's the brutal truth that nobody wants to hear. Confidence is cheap. Anyone can project it. Knowledge is expensive. It takes years of study, painful experience, scars, and humility. Most people choose the cheap version. They pay the price later with their capital. Psychologists call it the Dunning-Kruger effect. I call it being stupid and not knowing it. The dumbest people in any room are often the loudest. And the smartest people are usually the ones asking the most questions and admitting what they don't understand. So, how do you protect yourself from this trap? By building what I call a circle of competence. You don't need to know everything about everything. You just need to know the boundaries of what you actually know, and you need to absolutely refuse to step outside them. Most people hate boundaries. They think they're limiting. But in investing and in life, limits are actually liberating. They keep you safe. They prevent you from wandering into territory where the sharks eat amateurs for breakfast. The problem is that ego gets in the way. People want to look smart at parties. They want to impress their friends and colleagues. They want to predict the future like they've got some kind of crystal ball. That's why financial television exists and thrives. It feeds endlessly on overconfident opinions from people who don't know any more than you do. I'll put it plainly. If you can't say, I don't know, at least 10 times a day, you're probably deluding yourself. And if you build an investment portfolio based on delusion and false confidence, you'll eventually get slaughtered by reality. Warren Buffett likes to say, we don't have to be smarter than the rest. We have to be more disciplined than the rest. Discipline means sticking to what you actually know, ignoring what you don't, and admitting ignorance fast and without shame. The irony is that humility makes you stronger, not weaker. Saying, I don't know, won't cost you anything. Pretending you do know when you don't, that will cost you everything. So here's the question you need to ask yourself. Do you want to be right, or do you want to be rich? Because sometimes they're opposites. Most people spend their whole lives thinking like employees. That's why they never get wealthy. Careerism is a disease, and it's everywhere. You see it in law, medicine, corporate life. People climb ladders, polish resumes, chase titles and promotions. They live for the approval of bosses, clients, and institutions. And they wake up at 65 wondering why they have nothing to show for it but a modest pension and a gold watch. I know this because I started that way. I was a young lawyer in Los Angeles, billing hours and collecting fees. I tried to impress the partners, and one day it hit me like a lightning bolt. If I kept at it, I'd be comfortable, but never wealthy. I'd be trading my time for money until I dropped dead, so I quit the traditional path. People thought I was crazy. Why give up a stable career with predictable income? Because stability is often an illusion, and because being a careerist means you're always dancing to someone else's tune. The real money, the enduring wealth, comes from ownership. owning a business, owning equity in great companies, owning assets that work for you while you sleep. Warren Buffett understood this instinctively. He didn't want a salary. He wanted ownership. That's why we bought entire companies instead of chasing promotions. Careerists think in terms of pleasing a boss and getting the next raise. Owners think in terms of building something that lasts and compounds for decades. The questions couldn't be more different, and they lead to completely different outcomes. The irony is that careerism feels safer. The paycheck shows up every 2 weeks. The boss pats you on the head. Your parents are proud, but the long-term math is brutal. Inflation eats your wages. Bureaucracy caps your upside. And one corporate restructuring can erase your security overnight. Ownership, by contrast, feels risky. You put your own capital at stake, you take full responsibility. There's no safety net. But the upside is unlimited. You reap the compounding. You build genuine independence. You stop begging for raises and start making your own rules. Most people never make this mental switch. They stay in careerist mode until they die. They cling to perceived stability like a life raft, never realizing it's tied to a sinking ship. Now, don't misunderstand me. Not everyone can or should start a business from scratch. Most businesses fail, but everyone can own something. A share of a great company, a piece of productive real estate, an asset that works without your constant labor. That's ownership thinking. The key is to stop thinking like a hired gun and start thinking like a capitalist. Ask yourself honestly, am I building an asset or am I just selling my hours? If it's the latter, you're stuck in a trap. If it's the former, you're on the path to real freedom. Warren and I never envied careerists. They got applause and titles. We got equity and compounding. In the long run, equity beats applause every single time. So here's the rule. If you want to be wealthy, stop polishing your resume and start building your balance sheet. Titles fade. Ownership compounds. And compounding, not career climbing, is what gets you that first 100,000 and every 100,000 after that. I was born in 1924. That means I grew up during the Great Depression. And let me tell you, there's no better education about money than watching an entire society run out of it. My grandfather went bankrupt. My father struggled to keep legal clients who couldn't pay. People I knew lost farms, homes, dignity. If you wanted a lesson in financial fragility, you didn't need a classroom. You just needed to look out the window. The first thing the Depression taught me, money equals survival. Not yachts, not luxury, survival. When cash dries up, you see how quickly respectable families crumble. Men who once walked tall suddenly stood in bread lines. Women patched clothes until they were more thread than fabric. It burned into me a permanent rule. Never be dependent on the kindness of strangers, governments, or creditors. Depend on your own savings because when the tide goes out, nobody's coming to rescue you. The second lesson, avoid debt like the plague. Debt killed more fortunes than the stock market did. Families with no debt got by. Families with debt went under. I saw the same pattern repeat in 2008. Different era, same disease, same outcome. The third lesson, resilience beats brilliance. Plenty of smart people went broke because they were leveraged, proud, or both. The survivors weren't always geniuses. They were just conservative. They saved. They stayed liquid. They didn't risk everything on being right. Warren and I grew up shaped by that era. It made us allergic to debt, skeptical of easy money, and obsessed with durability. That's why we always say we don't want to go back to zero. One wipeout can undo decades of progress. The Depression made me cautious, but it also made me optimistic. Why? Because I watched America climb out of it. I saw recovery, rebuilding, growth. That taught me another vital rule. Capitalism works if you give it enough time. So, I came out of that period with two seemingly opposite beliefs. Always expect hardship and always believe in eventual recovery. That's not contradiction. It's balance. Pessimism protects you. Optimism enriches you. Together, they keep you alive and compounding. If you want to prepare for the future, learn from the past. Live as if another depression could come tomorrow, but invest as if prosperity will return in time. That paradox is the only way to stay sane and solvent. If you want to stay poor, it's remarkably easy. Load up on debt, surround yourself with fools, and add unnecessary drama to your life. That cocktail has ruined more people than bad markets ever did. I made a different choice early. I cut those three poisons out. First, debt. I already told you what the Depression taught me. Debt is a noose. You may not feel it tightening at first, but it always does. Credit cards, payday loans, margin accounts, different names, same trap. Warren and I built Berkshire without the kind of leverage Wall Street loves. That's why we sleep well. If you need debt to make your plan work, your plan isn't good enough. Second, drama. You'd be surprised how many intelligent people ruin their lives chasing chaos. Bad marriages, foolish lawsuits, toxic partners. They spend their energy on soap operas instead of compounding. I had my share of real tragedy. I buried a child. I lost an eye. I got divorced. Life handed me enough genuine drama. I had no appetite for manufactured drama. Don't pick fights. Don't sue unless absolutely necessary. Don't waste time on people who drain you. Third, dumb people. This one is underrated. Who you spend time with will determine 90% of your outcomes. If you invest with idiots, work for idiots, or marry idiots, you'll pay dearly. Warren and I had a rule. We only dealt with people we liked, admired, and trusted. No exceptions. We passed on plenty of opportunities just because the people running them were jerks or incompetent. Was that costly short-term? Maybe, but long-term it saved us from disasters. Look around. Half of America's problems could be solved if people stopped buying things they don't need, stopped dating people who are clearly wrong for them, and stopped taking advice from idiots. But that requires discipline, and discipline is rare. So here's the prescription. Don't borrow what you can't repay. Don't create problems you don't need. Don't associate with fools. Do those three things and you'll already be ahead of 90% of humanity, because money isn't the only thing that compounds. Trouble compounds too. Most partnerships in business fail. They end in lawsuits, betrayals, or exhaustion. Mine with Warren Buffett lasted more than 60 years. That wasn't luck. It was design first. We trusted each other completely. If Warren told me something, I believed it. If I told him something, he believed it. No hidden agendas. That kind of trust saved us from the poison that ruins most partnerships: suspicion. Second, we were complementary. Warren is more optimistic. I'm more skeptical. He sees opportunity. I see danger. Together we balance each other. Alone we might have been good. Together we were much better. Third, we agreed on fundamentals. We both hated debt. We both valued patience. We both believed in owning great businesses for the long haul. When you agree on principles, you don't waste time fighting about tactics. People assume we never disagreed. Wrong. We argued plenty, but we argued productively. If Warren thought something was worth doing and I thought it was stupid, I said so. If he convinced me, we did it. If he didn't, we didn't. No hurt feelings, no ego contests. Just logic. Our partnership worked because it was about more than money. It was about shared values. We liked the same jokes, the same books, the same ideas about life. People always ask, how do I find a Buffett? My answer, don't try. First, be worthy of one, then maybe you'll attract someone equally rational. In the end, our partnership wasn't about maximizing returns. It was about minimizing mistakes. We didn't need to be geniuses. We just needed to avoid being stupid together for a very long time. People love to imagine Warren and me as masterminds who carefully plotted our way to billions. That's complete nonsense. I never planned to be a billionaire. I just overshot my goals. The truth is simpler and less glamorous. I tried to save. I tried to invest rationally. And I tried to avoid doing stupid things. That's it. The rest was time and compounding working their magic. Most people can't accept that answer. They want a secret formula, shortcuts, tricks, hacks. Sorry, there aren't any. The formula is so dull that most people refuse to use it. Spend less than you earn. Invest the difference in something sensible. Let compounding do its work. Wait longer than everyone else. Do that for 50 years and you'll look like a genius. But you won't feel like one along the way. I didn't get rich because I was smarter than everyone. I got rich because I was more stubborn than everyone. I could endure years of sitting, waiting, ignoring the noise. It's not brilliance. It's stubbornness. When the numbers got big, I didn't let them change my behavior. I lived simply. I drove modest cars. I didn't try to keep up with rich neighbors. I didn't need external validation. That's another paradox. You don't get rich by acting rich. You get rich by acting boring. You save when it's hard. You avoid debt when it's tempting. You sit still when it's uncomfortable. Then, one day, people look at you and say, "How did he do it?" I'll tell you how. I didn't blow it. That's all. I avoided the big mistakes and let time work. You don't need to swing at every pitch. You don't need to predict the future. You just need to survive, let compounding work, and not screw up your own life. So, yes, I became a billionaire. But I never aimed for it. I just aimed for survival, rationality, and a decent night's sleep. The billions came as a byproduct. Overshooting is better than undershooting. If you save too much, nobody complains. If you save too little, it's a tragedy. So if you want a formula, here it is. Don't aim to be rich. Aim not to be stupid, not to be dependent, not to be fragile. Do that long enough, and you might just overshoot too. Tell me in the comments, what principle from this lesson will you apply starting today? What's the one change you'll make this week? People always want me to give them some magic trick that will transform their finances overnight. But the truth is insultingly simple, and most people hate it, because it requires work. If you're not spending less than you earn, I can't help you. Nobody can. Doesn't matter how smart you are. Doesn't matter what stock tips you get. Doesn't matter what opportunities come your way. If the money leaves your pocket faster than it comes in, you're finished. That's arithmetic, not philosophy. You can't out-invest stupidity in spending. You can't compound what doesn't exist. The first 100,000 is hard precisely because it forces you to live below your means. And if you can't do that, forget everything else. I've seen brilliant people absolutely ruined because they couldn't grasp this simple truth. Lawyers, doctors, CEOs, it doesn't matter. They made millions and spent millions and ended with nothing. They thought their high incomes would save them. The graveyard of rich fools is crowded. Warren and I didn't get rich by being flashy. We got rich by being consistent. We lived like people who understood basic subtraction. Money in, less money out, year after year after year. That gap, the savings, is where compounding lives. Kill the gap, kill your future. It sounds harsh, but it's actually liberating. Because it means you don't need genius. You don't need perfect timing. You don't need luck. You just need to master one boring principle. Spend less than you earn every year without exception. Most people won't do it. They'll complain about inflation, about unfair systems, about bad luck, about their circumstances. And sure, the world isn't fair. The system has flaws. But discipline works even in unfair worlds, especially in unfair worlds. The people who master their spending always have options. The people who don't are always trapped. So if you want real advice that will actually change your life, here it is. Stop looking for magic. Stop envying your neighbors. Stop chasing shortcuts that don't exist. Focus relentlessly on the basics that everyone knows, but almost nobody follows. Save a portion of every dollar that comes in. Invest that savings in something sensible that you actually understand. Sit on those investments longer than feels comfortable. Repeat this process without deviation for decades. It won't feel good at first. It won't feel impressive or exciting. Nobody will applaud when you put a few $100s aside instead of buying the latest gadget or taking an expensive vacation. Your friends might even think you're cheap or strange. But one day, you'll cross that first $100,000. And on that day, you'll understand something profound that most people never learn. Compounding finally turns from abstract theory into concrete reality. The boulder you've been pushing uphill with every ounce of strength suddenly crests the peak and starts rolling downhill, gathering speed. The machine that was working against you for so long finally starts working for you. And you'll realize with perfect clarity that the hardest part was never the math or the investment strategy. The hardest part was always the discipline, the willingness to be different, the patience to let time do its work. So let me leave you with this final truth, and I mean every word. The first $100,000 is absolute hell. It tests everything about you, your patience, your discipline, your ability to delay gratification, your willingness to be different from everyone around you. It's uncomfortable and slow and often feels pointless, but it's also the only real test that matters. If you can get there, if you can build that discipline and maintain it long enough to cross that threshold, The rest will follow naturally. The second 100,000 comes faster. The third faster still. The compounding machine accelerates once it has enough fuel, but if you can't get there, if you can't master yourself long enough to save that first meaningful pile of capital, then no strategy, no guru, no market miracle, no lucky break will save you. You'll spend your entire life treading water financially, wondering why wealth seems to come easily to others while it escapes you. This is your final reminder. Subscribe to this channel now if you want more of this honest, rational perspective on building real wealth. No hype, no tricks, just the truth about how money actually works. It's not glamorous advice. It won't make you feel good immediately. It won't give you permission to spend on things you want right now. But it's the only advice that actually matters, because it's the only advice that's grounded in reality rather than fantasy. Spend less than you earn every single year, without exception. Invest what you save in businesses and assets you understand. Stay patient, even when patience feels impossible. Ignore the noise, the hot tips, the people getting rich quick around you. Most of them aren't really getting rich. They're just getting lucky temporarily, and luck runs out. Build something real. Build something that can withstand storms. Build something that compounds over decades, not months. That's the path. It's not exciting, but it works. It's worked for centuries, and it will work for centuries more, because it's based on mathematics and human nature, not trends or fads. The choice facing you is simple, but not easy. Will you have the discipline to do what most people won't? Will you have the patience to let compounding work its slow magic? Will you have the wisdom to ignore the crowd and stick to principles that actually build wealth? If you can answer yes to those questions, if you can follow through with action and not just intention, then that first $100,000 will eventually arrive. And when it does, your entire financial life changes. Not because $100,000 makes you rich, it doesn't, but because it proves you've developed the rarest skill in the world, the ability to control yourself. And that skill, once developed, will serve you for the rest of your life. It will carry you through market crashes, personal setbacks, and economic turbulence. It will compound not just your money, but your peace of mind, your independence, and your options in life. That's what nobody tells you about building wealth. It's not really about the money at all. It's about becoming the kind of person who can handle money wisely. It's about developing discipline in a world that celebrates impulse. It's about thinking long-term in a culture obsessed with immediate gratification. The first $100,000 is hell because it forces you to become that person. It strips away every excuse, every rationalization, every shortcut. It demands real sacrifice, real patience, real discipline. Most people break under that pressure. They give up, make excuses, blame circumstances, and stay broke forever. But a few people, and you can be one of them, embrace that challenge. They accept the discomfort as the price of future freedom. They endure the boring, slow accumulation because they understand what's waiting on the other side. They become the kind of people who can build and maintain wealth, not just dream about it. So the real question isn't about money at all. The real question is about character. What kind of person will you choose to become? Will you choose immediate comfort and long-term regret? Or will you choose temporary discomfort and long-term freedom? The path is clear. The principles are simple. The execution is hard. But it's the only path that actually works. The only path that stood the test of time. The only path that will still be working long after every get-rich-quick scheme has collapsed into dust. Now, tell me in the comments, what principle from this lesson will you apply starting today? What's the one specific change you'll make this week to start your journey toward that first 100,000? I want to hear your commitment. Make it public. Make it real. This is the wisdom that took me 99 years to fully understand and articulate. This is what I wish someone had told me clearly when I was 20 years old, though I'm not sure I would have listened. Most young people don't listen. They have to learn through pain and experience. But maybe you're different. Maybe you're ready to hear this message and actually act on it. Maybe you're tired of living paycheck to paycheck. Tired of watching others build wealth while you stay stuck. Tired of the stress and uncertainty that comes from having no financial cushion. If that's you, if you're genuinely ready to change, then start today. Not tomorrow, not next month, not after you get your next raise. Today, look at your spending. Cut something unnecessary. Put that money aside. Make it automatic so you can't cheat yourself. Do it again tomorrow. And the next day. And the day after that. String together enough days of discipline, and they become weeks. String together enough weeks, and they become months. String together enough months, and they become years. And somewhere in those years, quietly and without fanfare, you'll cross that $100,000 threshold. And on that day, you won't need to tell anyone. You won't need to celebrate publicly. You'll just know deep in your bones that you've won the only game that really matters, the game against your own weaknesses, your own impatience, your own desire for immediate gratification. That's the victory that nobody can take from you. That's the foundation that can't be shaken. That's the beginning of real, lasting, generational wealth. The first 100,000 is hell, but it's a hell worth walking through, because on the other side is freedom, options, peace of mind, and the quiet satisfaction of knowing you did what most people can't or won't do. Subscribe now for more honest wisdom about money, investing, and building a life of rational prosperity. This is where we cut through the noise and deliver the truth. Now get to work. Stop reading, stop researching, stop planning. Start doing. Start saving. Start building. The clock is ticking, and compounding rewards those who start early and stay consistent. Your first 100,000 is waiting, but it won't come find you. You have to build it, dollar by dollar, decision by decision, sacrifice by sacrifice. That's the path. That's the truth. That's the only way forward.